So when we talk about markets, Kathryn, sometimes we're talking about the debt market, sometimes we're talking about the equity market. Let's talk about equities right now, S&P. I'll put a chart up here that I find at least very interesting because over time, basically, the S&P moves in the same direction as federal fund futures yields. Now it's diverged, where we have the Fed funds coming down and the S&P continue to go up. Is this really an illustration of which one's right? Have we got good times ahead or bad times ahead?
Look, I think, David, the last, let's say, call it 5% of the upside, the recent upside year to date in the S&P 500, I think can be attributed to this, sugar rush on the Fed going to cut rates more than I expect. So I do think that from here, and it could be this, it could be today, it could be in September, as Lauren correctly mentioned. Perhaps today the Fed takes it very calm, but in September doesn't cut again. So look, I think from here to year end, you're going to see some dip. I attribute about a 5% downside to U.S. equities on that front. And I think it will open up opportunities if I'm right and the Fed cuts one time or cuts maximum twice, 25 basis points each. That's stimulative. And I think that we can have opportunities to entry in the equity markets, both on the domestic and the international front in this fourth quarter.